Hey everyone, it's Mark Jones with your mortgage market update. This week got a little heated in the financial world as current sitting President Donald Trump made headlines again, this time calling out Federal Reserve Chairman Jerome Powell, accusing him of playing politics, saying his termination couldn't come fast enough. Want to play a little clip for you real quick?
I also want to flag that just in the last 2 minutes, the president also posted on Truth Social about the Federal Reserve just ahead of Powell's speech. The president says this would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He is always late, but he could now change his image and quickly. He says energy prices are down, interest rates are down, inflation are down. So cut interest rates, Jerome, and stop playing politics. Obviously, it's not anything new, but given the context here, we know the Fed isn't meeting officially for a policy meeting until May, but it does come just ahead of that speech. We will see if the Fed chairman addresses it later today.
Now, what does that mean for you? And more importantly, what does it mean for mortgage rates? Well, the Fed's #1 job is to control inflation and stabilize the economy by adjusting interest rates. And right now, Powell isn't rushing to cut rates, and Trump's public pressure could stir uncertainty in those markets. But I want you to think about something here. If we've got unemployment rate up, inflation rate down, in addition to the looming tariffs that could be imposed here in the near future, in my opinion, I think it would be a great idea for Jerome Powell and the Fed to start lowering those rates, allowing consumers and businesses out there to refinance any outstanding debt, such as auto loans, mortgage loans, and business loans, to prepare for the increased prices of tariffs coming. Now, some of you may think that this is an inflationary type practice, but at the same time, you have to look at the other side of the coin. In addition, if Jerome Powell is saying that all of these indicators are not going to be pushing him to lowering rates, why then were interest rates lowered just before the election, when all of these same indicators were opposite? Inflation was up, unemployment was down. I'm trying to figure out how it makes sense for him to not start lowering the Federal Reserve rate. I'd love to get your opinions on this topic, so comment below and let's have a conversation. And if you're looking to utilize your current existing mortgage to leverage to pay off higher interest debt, or maybe you're looking to purchase your first home, contact me, Mark Jones, your mortgage expert, because whenever you think home, I think mortgage.